Welcome back to the Secret Stash. My name is Chuck Charlton with the Charlton Advantage team, and this episode is all about investing in Calgary and why we think it's such a good opportunity. My wife and I recently purchased a pre-construction townhouse, and this episode is all about why and the opportunity that we saw. My friend Andrew LaFleur is running the session. He's also the broker that helped us with this project, and I think you're really going to like what he has to say. This is a market that's everything that Ontario and Toronto are not currently, including affordable. So I'll let you watch the episode, and just remember, make sure you do your diligence. Just because I say something or Andrew or anybody else, verify everything. We can put you in touch with the right people. You can come to us with any questions, but I think you're really going to like this episode. So without further ado, let's roll it.
Well, I guess in the meantime, before we get into your stuff, I guess I can start by just saying this whole thing started with me. I got an email from another agent. You know, we get these emails all the time in our industry. And there was a new Toronto condo project launching. And Andrew, to me, is the Toronto pre-construction expert. Forwarded the email to him. And I said, hey, what about this? What do you think? Is this legit? Is it good? And then that led us to this whole tangent of, well, guess what my clients are doing, right? My clients are getting a little bit weird about Toronto and GTA. I mean, we've had such a good run. The costs now are so high that it was like, what are the other options? And so you shed some light on Calgary and Alberta in general being a really good investment. Hussein had a question. Do they have an assignment clause? Okay, so you'll cover some of that stuff there. We got to be careful we don't go too granular. This is more about, big picture, why we chose where we chose. I'm completely transparent. My motives are simply just to kind of share good stuff. If I see good stuff, I'm always the guy leading with the giving hand. I want to tell all my friends about it. And I think this is kind of a perfect storm that's happening. So Andrew, do you want to maybe start us off? We're at 7:04 now. I can let people in and maybe take it from the time when I reached out to you. Right.
And thanks, Chuck. Thanks everybody for being here and being on time. And as people keep coming in, that's okay. They can join us. And as Chuck said, this is being recorded. So if you got to head out, if you're taking the kids to soccer or whatever, no worries. You can watch the replay later as well. So Chuck reached out to me recently and said, we've known each other for years. And he said, look, I'm thinking about getting something pre-construction as an investment. So I said, that's great. Toronto's a great place to invest. But as Chuck said, some issues with Toronto right now. It's very challenging to find good value. And a lot of our clients are actually investing in Calgary. In fact, I'm actually, as a guy who's been selling condos in Toronto for 14 years, I'm selling now more condos in Calgary, condos and townhomes in Calgary than I am in Toronto. So I think, Chuck, you were a little bit surprised at that answer, but I sent you this information, which you guys are all going to get the same information after this presentation. If you're interested, Chuck took a look at it, Chuck and Melissa, and they decided this was a good investment, and they jumped in. So I said to Chuck, well, if you find this valuable and worthwhile and something you want to put your own money in, I have a feeling some of your clients probably would be interested as well. So what if we just do a webinar like we're doing right now and present the information to them and see who's interested. So that's how we got to where we are right now.
And I was very skeptical too. I mean, if you remember, like I said, Calgary, I said that's a very jittery market, right? It's very prone to oil prices. I mean, I've got realtors I know right across the country, and that was always a market I was very afraid of, is that, you know, one year it's good, one year it's not so good. And, you know, at the same time, I think another thing that was happening is I've had a bunch of my clients, like more, I can see trends. I know where people are going. They sell their Milton home. Where do they go? And I'm seeing a lot of our clients are moving to Alberta. You know, I had a young couple who bought their first home in Milton, kept it for 2 years. The value almost doubled. And crazy, eh? Like they bought for 4 something and they sold for over 8. And so they bought 2 investment properties in Edmonton. I've got 3 other clients that are moving to Calgary, and they're telling me the prices, you know, a 3,000 square foot home for like $700,000 or something like that. And I thought, there's something going on here that I need to know about. And then when you said that, I thought, okay, tell me more. I'm very interested.
Yeah, exactly. So that's so that's how we got to where we are today. So should I jump in with
throw some slides up?
Let's jump into it here. I got some slides for you guys to view. Hopefully the technology works for us. Can you see that?
Yeah, it looks good.
That looks good.
Yeah.
All right. Okay. So why I'm investing in Calgary is sort of the title of presentation. Speaking for myself, I'm purchasing multiple units in Calgary right now, pre-construction, and Chuck and Melissa are as well. So just briefly, very quickly about me, Chuck mentioned I'm a realtor with REMAX here in Toronto. Been selling real estate since 2007. One of the top 100 agents in Canada with REMAX, and I've helped over 1,000 condo investors, pretty much all exclusively in pre-construction. And also I'm a condo investor myself. I own multiple condos in Toronto and the GTA. Most of my portfolio is here in Toronto, but now I'm starting to invest in Calgary. So nice to meet you. Hello, everybody. That's for you, Chuck.
Got a few of those. I got a preview of this today. So there's a couple of those pop-ups. They're great.
So yeah. We're not too serious here, folks. So don't worry. Feel free to ask away any questions. As I said, there's a couple problems with Toronto, investing in Toronto real estate right now. Toronto's a great place to invest. Please don't get me wrong. I'm not trying to say you shouldn't invest in Toronto. If you have the means, if you have the resources, and especially if you're a seasoned investor, continue to invest in Toronto and the GTA. You'll continue to do well, but I'm sure if you are a seasoned investor, you also agree with me on these 2 points. That is, you can't find cash flow anywhere in Toronto, and affordability is just, there is no affordability. The entry point now for anything, anywhere in the GTA is about 600,000. That's for a 1-bedroom. Whether you're downtown Toronto, it's a 1-bedroom. Whether you're in the 905, it's a 1-bedroom. It's just a slightly bigger 1-bedroom. But you're looking at about 600,000 bare minimum anywhere. If you want to get a 2-bedroom or a townhouse or something, again, you're way, way more than that. So most people just can't afford to get into this game. And even if you do get something, the cash flow just isn't there. Even if you're buying duplexes, and some even triplexes are not cash flowing. So that's a challenge that caused me in recent years to start to say, okay, well, I have a lot of clients and investors who want to keep investing, but Toronto is becoming harder and harder to do that. What other options do we have? So took a look at what are the 4 major cities, because we love to invest in cities. We believe in cities. We believe that cities are where you want to put your money as a real estate investor. So looking at Canada's 4 largest cities, right? Toronto, Montreal, Vancouver, Calgary. So Toronto is Toronto, as I mentioned. Those are the challenges we face. Montreal, up until recently, Montreal actually was a great market to invest in as well. It was undervalued compared to Toronto. It was pretty cheap. There was a big gap between Montreal prices and Toronto prices. And then about 3 years ago, that all changed. Montreal has now had its moment. Prices have soared in Montreal, and now prices in Montreal are not that far off from where Toronto is now. Vancouver is Vancouver. It's probably Toronto, even more extreme version of Toronto. It's even less affordable, and cash flow situation is even worse than Toronto. And then number 4 city in Canada, you have Calgary. So talking about Calgary, why Calgary? So Cole's notes, Calgary is 50 to 70% cheaper than Toronto. You can get positive cash flow in Calgary. You don't need to buy multi-family duplexes, triplex to get positive cash flow. You can buy a single unit that pays for itself and then some in Calgary. So that's a great place to start. It's the most livable city in North America. It was recently voted the 5th most livable city actually in the entire world. So it's a big city, but it's a very affordable and livable city, and you can have a very high quality of life in Calgary. And as Chuck said, more and more people are discovering that and migrating to Calgary because of that. It has a growing population. So you might be surprised at, if you just look at the headlines from the last few years of Calgary and Alberta, oil prices and everything, a lot of doom and gloom in recent years. Despite that fact, the population is still growing. So again, as a fundamental driver that we look at as real estate investors is the population in this market growing? It is. Calgary has the youngest population of a major city in Canada. It's great for employers, and when employers are looking for talent, they look for that younger demographic. And it's a sign of a city that is on the rise. And Calgary also has the highest incomes in Canada. It has the highest percentage of millionaires in Canada are in Calgary as well. It's an investor-friendly city. So compared to Toronto, especially the city of Toronto, but the Greater Toronto Area, but specifically city of Toronto, there's no land transfer taxes in Calgary. There's no HST in Calgary. There's no foreign buyer tax in Calgary. There's no rent controls in Alberta, and there are virtually no closing costs. This is huge. Another major challenge that we're facing as investors in pre-construction is the ever rising closing costs that are being offloaded by builders onto us as the buyers. So 10 years ago, you buy an average condo pre-construction, your closing costs might be $3,000, $4,000. Today, your average closing costs on a basic entry level $600,000 unit in the city of Toronto, you're looking at around $40,000. So it's in Calgary, it's zero. You pay your lawyer and that's it. It's very refreshing. Moving on. There we go. So again, comparing Toronto versus Calgary. So as I mentioned, Montreal is one of those cities where there's a huge price gap between Toronto and Montreal, and investors noticed that. A lot of money started shifting into Montreal, and the prices in Montreal have popped in the last 2-3 years, especially. Look at this chart here showing the price gap between the average Toronto price and the average Calgary price. It's at an all-time high of $589,000. The average price in Toronto, 1.1 million. And by the way, this is for the GTA, not just the city of Toronto, the entire GTA, 1.1 million. And Calgary is only 500,000. What's crazy to look at and see now, knowing what we know now, is if you look at, there was actually a time around 2006 to 2009, if you look at the chart, where Calgary was actually more expensive than Toronto. Not that long ago, Calgary prices were higher than Toronto prices on average. And now look where we are. Calgary is half the price of Toronto region, and it's probably a third of the price of the city of Toronto itself. Crazy. So this is an opportunity. We're talking about townhomes today, and specifically this is a townhome opportunity. So a lot of people like to invest in townhomes because they're easy to maintain, they're relatively affordable, they have low or no maintenance fees in most cases, and just people like to own dirt, right? All things considered, condo, apartment versus a house. If you can afford and you can own a house, then most people will prefer to own a house, whether to live in or to invest in. So let's say you wanted to invest in a townhome, pre-construction townhome in Ontario. Check out these real prices from 2021 right now of recent launches of new townhome projects that have launched. I used to say Calgary is half the price of Toronto when we started looking at this market a year or so ago. Now I say Calgary is half the price of Barrie. It's just ridiculous. These prices are so low for a major city, and again, there's such an opportunity here right now. So again, Calgary.
You have to remember too, you overlay that with the fact that you have a young population of people who are making really good money. The average salary, you said, is above the GTA. When you said that, I think that kind of sealed the deal in my mind. Say something's going to go on here. I mean, it just yeah, absolutely.
It's like you're building it's like you're building a potion, and then you put the gunpowder in, and it just goes. Like, right. We're just waiting for that. Calgary, I believe, we're just waiting for that moment for that to happen. Because they have the highest incomes, yet they have the lowest prices of any major city in Canada. Right? I mean, it's just, especially now, like we're doing this on Zoom, like you can literally you can have a job in Toronto and you can live in Calgary for a third of the price. And you can still keep your job in Toronto, couldn't say that a year and a half ago, but now that's actually a actual possibility. So for those of you who love numbers, you're going to love this next section of the presentation. If you don't love numbers, don't worry. We'll get to some other stuff after this, and you can take your time and go through this. But I wanted to give everybody just kind of a rough overview. I'm an analytical guy and I appreciate them. So I want to give you guys just an overview of where the market is in Calgary right now and sort of where it has been, how it got here over the last decade or so. So looking at sales, these are the number of sales in Calgary. So basically there was a boom in Calgary, as Chuck said, boom and bust market. It is true. So we had the last boom was sort of 2011 to 2014. What happened? Oil prices collapsed, if you recall. And then Calgary essentially has been in a recession while the rest of Canada has been doing pretty good. Calgary has been in a recession, and then of course COVID in 2020. So it's been rough. It's been very rough for Calgary, no question, over the last number of years. But look at 2021. What is going on here? This is a whoa moment here. This is way off the chart and somewhat quite unexpected, right? So the market is doing really, really well in 2021. The sales, it's basically Cole's notes, Calgary 2021. It's the best year that they have had in that market pretty much over the last decade, including those boom years that you can see there. So that's good. So it's sales. Talk about prices. What's the price story in Calgary? So again, this one goes back all the way back to 2001 until today. So the blue lines are the price growth. So you can see 2006 was an unreal year for Calgary, not too dissimilar from the year that we've just had, where prices went up more than 40% in a single year. So that was a major boom, 2005 to 2007. That was when prices in Calgary were actually higher than they were in Toronto. And then we had the global financial crisis, 2008. So they had some rough years there. And then they had another boom leading up to 2014. And then again, oil price collapsed. And then since 2014, essentially till 2020, recession, hard times, the blue lines are below. So prices have mostly been declining. The green line on the chart is the actual average price. So you can see what's happening here. Buying today in 2020, the end of the green line where we are, is roughly equivalent. If you go horizontal, it's roughly where prices were in 2014. So it's like you're hopping in a time machine and going back to buying real estate at 2014 prices in Calgary. So again, all of these things, opportunity. Let's look at supply. Supply is such an important factor when we look at the market. As investors, of course, we want to see supply going down, because when supply starts to go down and tighten, likely prices are going to go up. And that is exactly what we're seeing this year. The trend is down after mostly the trend being up for several years. When we talk about, again, going back to prices, the trend in 2021, prices are going up, which is something that we haven't seen in Calgary. Going back the past several years, most of the time you could see that red line is below the mean. So prices were declining for most of the last few years. But now, as you can see, they're having the best year in a long time. Prices are rising at a nice clip, but not anything crazy or scary, we'll call it, like we're seeing around here with 20-30% price appreciation in the GTA. So summarize 2021 right now, this is the time to invest in Calgary. With that being said, let's get into this. Yeah, go ahead.
Before we get into these, I think the question that's on my mind, and I know we've talked about it, but how can somebody be assured that there's not going to be the same volatility, right? That we are maybe past, because I know it's been a very oil dependent economy, but I think that's starting to change according to some of the things that I've looked at. Can you talk about that a bit?
Yeah, it's a great question. So the obvious question is, yeah, Andrew, how do we know things are going to improve and not go in the toilet again? Because there's such a history of doing that. And what's going on with oil price, and how does it relate to the economy? Common question. So the way that I look at it is the economy and the real estate market has basically been in the crapper for like 6 years. These investments that we're buying now are pre-construction. They take about 2 years to get built. And then they have a 3-year rental guarantee on top of them with positive cash flow, which essentially gives you as an investor a 5-year runway ahead of you, which is like a worry-free, hassle-free, no risk runway. So you're buying time with this. So you're making a very small bet and buying these types of investments in Calgary right now. You're basically saying you believe that at some point in the next 5 years, this market is going to take off. There's a lot of evidence to suggest it is taking off right now as we speak in this year, but you believe that trend's going to continue and things are going to pick up. If it's true that might not happen, and there's no guarantees, of course, with any investment, and it might not work. It might work out badly, but if it works out badly, basically what has to happen is that Calgary has to be in a recession for 10 years or more, right? So if you think that Calgary is going to be in a 10-year long recession, the fourth biggest city in Canada, which statistically has probably never happened in the history of any large city in Canada. But if you think it's in the crapper for 10 years or more, then obviously this is not a good time to invest. But if you think that, yes, it makes sense that at some point in the next few years, this thing is going to recover, and the gap between these ridiculous prices in Calgary versus every other major city in Canada or anywhere in the Western world, that gap has to shrink because it's just ridiculous how cheap these prices are. Then again, you're going to be fine because you have that 5-year runway ahead of you. In terms of the oil question, I'm not an expert, obviously, in oil and how it relates to, the economy and everything else. But the way that I look at that is essentially the oil crash happened in 2014, 2015. Again, many years ago. So we're in 2021. All the layoffs, all the cutbacks, everything negative associated with that caused the recession, that's already built in to the equation. That all happened in 2016, 2017. So it's, there's nowhere to go but up from here. They already laid off 20-30% of the workforce. they're not going to lay off another 20, 30%. Like there's no more people to lay off. It's just, it's upward from here.
Now, the other thing too is I've heard that the tech industry is really, like, Calgary sees itself as a very technology based city, and it's starting to move away from an oil based economy as its majority stake, right? It's like, it's always going to be a part of their economy, but it's now, okay, let's try and bring the tech companies in.
Absolutely. And if you're a tech company, again, like Calgary has all the ingredients for that. The city of Calgary has a dedicated, division that is sole purpose is just to lure tech companies and tech talent into the city. And they have a lot of things going for them. They have the cheapest commercial real estate in Canada. They have tons of commercial real estate available, office space for large companies. They have an amazing talent pool. Again, the youngest population of any city in Canada. Universities and colleges, very well educated population. And young people can live a very high quality of life in Calgary at a very, reasonable salary compared to any other Toronto or San Francisco, New York, any other tech hub, right? So yeah, if you Google around like tech companies in Calgary, you will see a lot of articles and information about companies that have recently relocated to Calgary for that reason.
Okay, so there's a question here. Apart from oil industry, what other industries or strengths does Calgary have? We don't want to sort of get too into those kind of things. We want to just kind of keep it high level. We don't want to keep you here all night too, but we can answer that offline. And I'm happy to put you in touch with some people who, like I said, residential resale agents. I can get some good contacts for you there too. Any thoughts about that quickly, Andrew? And then we'll get into what's available here.
Yeah, in terms of high level, like what other industries, I couldn't answer that question off the top of my head. But like you said, I think that the tech story is a huge thing. A lot of people have made comparisons with Alberta and Calgary to Texas and what Texas has done in the US, being a business friendly, low taxation, sort of a place where a lot of companies and are moving their operations from more expensive places to places like Texas, where it's just a lot cheaper to do business. So it's early days, but people are starting to make those comparisons and say, you know what, Calgary maybe has a chance of being sort of like Texas in that regard and luring some of these big companies where they can do things for way, way cheaper and still get that talent pool of young talent. Yeah, so let's talk about these two specific opportunities. So we have two townhome developments. One is called Savannah and one is called Dawson's Landing. And there you have some info about those two opportunities. They are similar, but they have some key differences. The Savannah units are condo townhomes, so they have a couple $100 a month or so condo fee. The Dawson's Landings unit are freehold townhomes, so they don't have that condo fee. The Dawson's units are sort of a traditional 2-story with a basement and a garage in the back. The Savannah are a little bit more of an urban style that we're more used to here in the GTA. So 3 levels, built-in garage, very low maintenance, great for investors. And also Savannah is a very short walk to the LRT, which is like their Calgary's version of the subway. There's some couple renderings of what these two different townhouse designs will look like. Very nice looking stuff. Who's the builder? So the builder is Truman Homes. They're a local builder in Calgary. They've got over 35 years of experience. They built thousands of homes and condos in Calgary. So anytime we do these sorts of opportunities, especially in new markets, we want to make sure we're working with a reputable builder, somebody who has, certainly is not somebody who's new to the game, somebody who has a proven track record, somebody who's been around and who, is going to fulfill on what they say. So Truman is certainly meets that and then some. Very well-known, well-respected builder in Calgary. And what we look for is, what we've come up with is what we call the no-brainer formula. So it starts with 10% deposit. So we want, when we're buying these opportunities, we want low deposits, which is what we have. It's, again, the price is around 400,000, 10%, 40,000, easy to get into for most people. We want rental guarantees. So again, we don't live in Calgary. We're at a distance. We want something that we don't have to think about, worry about, that is taken care of for us for a good amount of time after the property is built. And in this case, we're getting very strong positive cash flow, which is great as well. We want something that's pre-construction. Again, you can go out and buy resale, of course, in Calgary or any city. But the problem with that is there's a number of problems with it. But it's the main thing is you're not there, and it's a hassle, and it's a pain, and you're not getting any rental guarantees, certainly, or anything like that. So it gives you that, again, a nice runway ahead of you. You're buying time. You're letting the market continue to grow and appreciate while you're just sitting here in Ontario doing nothing. And we want affordable prices. We want something that is easy for people to get into and is dramatically contrasting what opportunities and options we have here in Ontario. And certainly that's the case. And we want to buy with a good builder, a strong builder who has a track record. And that's Truman, as I mentioned. So all these things together, this is what we call, it's a no-brainer. Like it just makes sense. It's easy. So financials. So you might have seen positive cash flow numbers. I don't know what you've seen or heard, but depending on how you crunch the numbers, about $300 to $400 per month positive cash flow on these townhomes, which again is completely unheard of in Ontario. You're never going to get any kind of cash flow like this, especially at this price. And you can't even buy anything at all at these price points, let alone buy something at these price points that also gives you such a strong positive cash flow. So again, if you're interested, you can go through these numbers in great detail at your leisure afterwards. There's a bunch of numbers here I won't go through right now. That's for Savannah. This one is the number breakdown for Dawson's. So looking at about $400 a month on these Dawson's units. Again, this is all with the 3-year guaranteed rent. Starts from day one, never a vacancy for 3 years, guaranteed. Here's another chart, which is a little bit shocking when you see the comparison between, okay, let's say if you do want to buy a townhome in Toronto right now, specifically, probably more, something a little bit more central, 1.2 million, say for, well, Chuck, what do you think a pre-construction townhome in Milton averages right now?
For the kinds of things equivalent to what we're seeing in Calgary, and the one that I bought, the one that I purchased was $399. In Milton, it would probably be about $900 or so. And I would say in Toronto, like maybe something like North York, it easily 1.2.
Easily. Yeah. Not even like downtown, but just somewhere in the outer kind of parts of the city, 1.2. Yeah. So again, you can go through this in detail later, but the main thing I want to point out to you is the cash flow. So if you're buying a townhome in Toronto, you're massively negative cash flow every single month, of course. But if you actually break it down, that's, roughly, you're looking at somewhere around $1,600 a month negative. This is after you shelled out over $300,000 just to get into it. So flipping over to Calgary, again, $300 to $400 a month positive cash flow. The price is, it's a third of the price. And to get into it, you're looking at $79,000 as opposed to $300,000. So, I mean, another way to look at it is you could buy 3 of these townhomes and you're getting like, over $1,000 a month positive cash flow. For the same price in Toronto, you're getting negative $1,500, $1,600 a month. So a bit of a summary here. What is this opportunity? This opportunity, it's a classic buy low opportunity. We believe this market is a buy low market right now. Buy low, sell high, right? It's a low risk opportunity. Again, you've got that rental guarantee. You've got that 5-year runway ahead of you. You're just sitting there doing nothing, collecting checks every month, positive cash flow, letting the market appreciate. It has very high ROI potential because of that. It's great for new investors because it's an easy investment to get into. A lot of new investors are getting into this, brand new investors. But it's also great for seasoned investors, especially people who have, 4 or 5 condos, say in Toronto, and maybe their cash flow in Toronto is negative. They pick something up over in Calgary and it kind of balances out the portfolio. You got some negative in Toronto, you got some positive in Calgary. It helps balance out your whole cash flow for your portfolio. And we're recommending, you got to think of this as a 5 to 10 year hold, right? This is not, it's not a get rich quick opportunity. It's not a quick flip. We don't recommend buying these if you're thinking, let me buy one, put my 10%, and then 12 months later, I'll flip it and I'll make a profit. We don't recommend that approach. If that opportunity presents itself and the market in Calgary shoots up, hey, great, we all got lucky, that's fine, but we're not expecting that to happen overnight. And again, you're not buying into an overheated seller's market. This is, it's a very different market. We need to understand the market you're buying into versus buying into, say, Toronto area. And it's, it's crazy here. And a lot of people are becoming more and more uncomfortable, we'll say, with the craziness of the market right now in Toronto. So that's the slides. That's the presentation. If you're interested, got a little website you can go to there. Just go to calgarywebinar.com, fill out the little form there with your name and info, and you will get all the details, floor plans, prices, breakdown, financials, everything for both of these opportunities instantly when you do that. So, and my contact information is there as well. Feel free to jot that down if you want to reach me directly as well. And so let's open it up to questions.
All right, so you can probably stop your screen share. We could leave it on for a little bit, but if you direct your attention, Andrew, to the chat, there's a couple of questions here about who's going to guarantee the rental, how is it guaranteed, is it contractual, is the exact rent price also guaranteed? I know the answers to this, but I'll let you answer.
Yeah, so the rental guarantee is a set amount for 3 years. You'll get all the exact amounts and everything. It's about $2,000 a month for 3 years for most of these units, depending on the unit. It starts the moment of occupancy. So as soon as the townhouse is ready, you start getting checks every month for 3 years. So the builder then goes out and rents out your unit for you and handles all of that. Whether the unit is rented out to an actual tenant or not, doesn't matter. You still get paid every single month for those 3 years. If they rent it out for more, if they rent it out for less, your amount is fixed for those 3 years. Yeah, hopefully that.
Now you don't, one
that.
of the questions I had was you don't really have a say in who the tenant is, which is not, in my opinion, ideal for me. I mean, I love to kind of screen them and meet them and all that stuff, but you kind of look at best case, worst case scenario like that. The security of knowing that I get a check every month regardless, to me, just, that overcame that. It's one of those things where it's like to get something, you got to give up something too, right?
Yeah, absolutely. If you're the type of person who wants to do that, then you got to make a decision if this is right for you or not. Because you're with these rental guarantees, it's always the same way. We've done hundreds of these over the years with different projects, and you give up your rights as the investor to have a say, and who rents it out. That's the whole point, is they do it for you. Now, obviously, a lot of people, the first reaction is, well, they're going to rent to somebody bad. I'm better at doing this. Well, they're professional management, so they do this for a living. They have done this hundreds and thousands of times, whereas you and I as individual landlords may have only done this a handful of times. So they're very good at what they do. And secondly, it's in their best interest to get a quality tenant in there, because again, they have to pay you every single month. regardless of if they get paid or not. So it's built into it's a system for them to find quality tenants in the unit for you.
And it's also like, how many people do you think after those 3 years are up are going to want to continue property management services with the same company? I mean, if it's been a good 3 years, I know for me, I'm perfectly happy to keep them going afterwards if it was a good experience.
Yeah, and that's a common question as well, as what happens at the end of the 3 years. You'll have different options, but probably the most common option people will choose is just to hire the property management company to continue to do the service that they've been doing for you. You just have to start paying them after 3 years.
Right. So it could be that you get a 3-year mortgage on this place, and then at the same time you kind of refinance, improve your cash flow position, take some money out. Like there's ways to use that 3 years strategically too.
Yep.
Yeah. A couple more questions in the chat. So what will happen in terms of property management? We answered that after 3 years. Usually property managers are between about 5 and 10%. I don't know how much they would charge independently, because it's kind of a package deal that when you sign the paperwork for this, you also sign for the rental guarantee. I had a private message from Thiru asking how maintenance or repair costs work. I guess there's some different elements. So the Dawson's Landing is a freehold town, so different than Savannah, different than the one that I purchased in Carrington, where you have some condo fees that cover some of the exterior maintenance, the lawn care, the snow removal, those kind of things. And I don't mind paying condo fees for that, because it's one less headache that I don't need to worry about somebody mowing the lawn or clearing the snow out.
Yeah, the Savannah ones, they're attractive. If you're just really looking for something low maintenance, turnkey, like you said, Chuck, grass is cut for you, like snow is removed. You never have to think about anything like that. The Dawson ones, they're freehold. So as the landlord, the management company is going to arrange for things like that on your behalf for those 3 years, but there may be costs that you might have to incur related to those kind of things, potentially, depending on how things are set up. It's one little extra variable you have to think about as an investor. The flip side with the freehold ones is the cash flow is going to be a little bit better because you don't have that maintenance fee. So some investors, they just love the freehold concept of no maintenance fees, and they gravitate towards that. Other investors say, you know what, I'm okay with paying a couple $100 a month if I just don't have to think about or worry about anything related to the property. So somebody says, do I need to fly to Calgary to close the deal? Absolutely not. Everything can be done remotely. Everything's done through DocuSign. Wire transfers. It's very easy to purchase from Toronto. You don't have to go to Calgary at closing or anything. Everything can be done from here. No problem.
Now, remember too, the thing that I'll add is that these are the two projects that right now seem to have, those are the ones front and center. But I mean, we pulled the trigger a couple of weeks ago and there was a whole other development. So if you look at these and maybe it's not your cup of tea, I mean, something's coming along. Like it's like every couple of weeks, something new is coming. They're getting swallowed up really well. And they're in different areas too, whether it's Carrington or, Savannah or any of the neighborhoods. So getting an overview of the geography and the different places to invest in Calgary, the neighborhoods, that's something like I can put you in touch with people. We can answer the questions from our perspective. My one that I purchased in Carrington, I love the fact that there was an LRT right near it. There was a Costco being built north of there. So if Costco's coming in, there's some high expectations for that neighborhood. So it's about kind of looking not only where things are at now, but where they're going to be in 3 to 5 years.
Mm-hmm. Somebody says, can a marriage be arranged? Can a mortgage be arranged locally? or will that be from someone in Calgary? Yeah. Again, the beauty of Canada and this great country we're in, like a mortgage is a mortgage from coast to coast. So you can get a mortgage easily for any property in Canada with any of the lenders that you're used to dealing with here. It's very easy to do. So that's no problem.
Yeah. Any of the big five banks or any of the lenders,
Yeah.
they're all, yeah, absolutely.
When it comes
approved in Ontario, our mortgage
program. Yeah. And when it comes to actual closing 18 months or so from now, when you actually need the real mortgage, there's a good chance that the builder themselves will have some relationship with their BMO or their TD or whichever bank they work with, that they may give you that option as well, direct you to go to their BMO representative or whatever. But yeah, in terms of getting a mortgage out of province, there's no problem at all.
And the reality is, if somebody's on this call and they own a house, like your home has gone up 20 to 30% in the last 12 months kind of thing. So the part that I always think about as an investor is that your rate of return on your capital that's sitting in your house is pretty much zero. The only thing it's doing is saving you whatever your mortgage rate is, right? It's not accelerating. It's not, I think about like babies making babies and like the compounding interest effect, and that's not happening with the asset of equity in your house. And so redeploying that can be a very effective strategy. And remember, I think about this kind of stuff. This is for my kids, right? It's not for me. And we can get in at a low enough number that it's, 40,000 now, essentially, and to get it up to 20% down payment. We're gonna have another 40,000 or so when it closes in a couple of years. I mean, most of us have made that much money or quite a bit more in our principal residence in 12
months. The last 6 months.
Yes. Yeah. Like last week. And
what day is it? Yeah. since Monday.
Yeah. So, with me, I'm here to just kind of share this with everyone. I'm not saying it's for everyone. I'm not saying there's no risk involved. I mean, as an investor, you need to balance everything off and see what makes sense. But I love just the kind of hands off that someone's going to be dealing with it for 3 years. And the pricing, I mean, how could you lose out on anything in a top 4 Canadian city? This is all just like what I said to you, Andrew. It's like, it makes so much sense. I think about all the regrets I had. I used to show bungalows in Toronto with basement apartments for $280,000.
Yeah.
And I wish, I had the perspective now that I had then, but this just seems like something where I can almost rewind the clock and buy at the kind of prices that you just can't touch anymore.
Absolutely. Yeah. Again, you're hopping in that time machine. You're going back and you have a chance to participate in this kind of a market. You're living in the mothership market of Toronto GTA, and you've seen what's happening. The exact same thing is going to happen in Calgary. It's just a matter of time. Is it going to take 10 years? Is it going to take 20 years? It doesn't matter, but we know that Calgary is going to get to where we are, right? And we have an opportunity because of, like you said, especially because of all the equity we have here, to just pick up a couple little pieces there and just hang on for the ride as it goes up.
Yeah, and the truth is, you and I have both put our money where our mouth is, in the sense like we've both done this, right? Because we just see the opportunity. We both, like you said, top 100 realtors in Canada. Like we live and breathe this stuff, and it's like you just sit here and go, this is something that doesn't come along every day.
Yeah, I mean, even there's so many angles to look at it and to say, these prices are they're way too low. Another angle I look at is just construction costs. I mean, even if you got the land for free in GTA area, you couldn't build these houses for this cheap, right? It's like replacement cost concept. It's like to build a 1,500 square foot home brand new, with nice finishes for $400,000, right? It's I was talking to one of my builder friends just an hour ago, and like a small custom home builder guy, and he's just finishing up a build that he started 16 months ago, and he said just over 16 months, the cost to build has gone up 15 to 20%. Like, there's no way he could start today and make any money doing what he's doing unless the market continues to go way up.
Right. Because most builders are on a 15 or 20% profit margin to begin with, right? So it's tough on them for sure.
Yeah, exactly. So I saw, I learned, I invested in Florida as well. Like back in, I've invested in much further away markets than Calgary, we'll say. Like, I invested in some condos in Florida back in like 2012. And again, one of the things that I see some similarities, it's not the exact same thing, but some of the themes and patterns I saw and reasons why I invested there are similar. And one of them, again, is just I look at replacement costs, and like I was buying condos in Calgary for below replacement costs. So I knew that like these prices have to go up, because if you want to build a new one of these condos, it's going to cost you more than what I'm paying for it right now. And it's going to take you a long time to build it. So, I see that same thing in Calgary.
Now, that great. Hussein actually asked the question he asked at the beginning of the presentation about assignment clauses. So could you assign this to somebody else?
Yeah, you can. The builder is okay with it. It's a common question that we've asked. So we've made sure that it's possible, and the builder will allow that in the contracts. And it's a very minimal fee of like $500, as opposed to, again, if you're assigning in a condo in the GTA, you're usually paying a few $1,000s for the fees for that. It's possible, but again, we wouldn't recommend it as a strategy. It's certainly quite risky to buy it with the intent to flip. If you're buying it, just make sure you have the ability and capacity and plan to close on it. If the opportunity should arise, and again, the prices in Calgary just shoot up 20% over the next year, and you want to assign it and you're able to do that, you got lucky, but I wouldn't recommend that as a strategy, more of just as a backup plan in case you're not able to close for some reason.
Karen had a question about financing, about whether the rental income is part of the qualification. I think that varies lender to lender. So you'd want to speak to a good contact in mortgages, and I'm happy, or Andrew's happy, to put you in touch with someone that we really trust.
Yep, exactly. In terms of rental income, how banks look at it when they're qualifying you for investment properties, it depends bank to bank how they're doing those calculations. And again, there's a good chance that the builder themselves will have a specific lender that's familiar with the builder, that's familiar with their programs, that's familiar with the specific project and the contracts and the rental guarantees as well. That will be an option for you at closing as well. But it depends.
Okay, we got a question here. What if the builder goes bankrupt? That's an interesting one.
Yeah, good question. So when you're buying pre-construction, so the deposits that you pay go into a trust account with the builder's lawyer. So your deposits are secure in that sense. If the builder were to go bankrupt, the project would just simply likely be canceled, and you would get your deposits back. There's also in Ontario, I should mention, because these are brand new homes with a builder, you do have a new home warranty with these as well. So in Ontario, we have what's called the Tarion warranty. They don't have Tarion in Alberta, but they have a very similar program over there as well. So certain items are covered for, certain things for 1 year, for 3 years, for 7 years.
Good. So did we cover all the questions? Do you guys have any of the other questions? Anything we can cover before we wrap up? We want to make sure we're respectful of everyone's time. Hey, we've got
So
one.
Karen's asking about locations. Again, they're both great locations, these two options that we have right now. There's pros and cons to both of them. We can talk more in detail if you're interested in diving into that in more detail. Certainly do your research and take a look. Once you get all the details after this call, you can drill down and explore on Google Maps and check out the areas and see see which one is more appealing to you.
Yeah, so maybe just request the information package, look through some more details about them, specific locations.
Yeah, so again, Chuck, can you still see on the screen the Calgary webinar slide?
Yeah, calgarywebinar.com.
Yeah.
It's got your information down below.
Perfect. Yeah, so again, if for some reason you can't see the screen, but you can hear my voice, just go to calgarywebinar.com, fill out the simple form there, and you'll get all the details instantly. Take your time, digest the material, go through it. Some of you, after doing that, will be ready and know what you want and ready to buy something right away. Others may want to jump on a call with me and go over things in more detail. That's totally cool.
Yeah, and I'm available too. I'm happy to share anything about my experience. You guys all know how to reach me, Chuck at charltonadvantage.com. My personal cell is 416-220-1697. I don't publish that out very often, so tuck that in.
I'm gonna write that down myself, right?
Yeah, exactly. But no, it's just, we just want to be open. Like, it's just, it's a business transaction, but it's just, for me, it's just about helping people and, shining light on something that I think is great, because believe me, I have regrets. My regrets have regrets about things I should have bought and I didn't. And I just look at this and I don't see any way that this goes south. And if you've been to Calgary, I just saw the comment from Rosa. It really is a very nice looking city. It's very clean. It's a nice place to live. And one of
the sunniest city in Canada.
Yeah, one of
most number of sunny days.
Yeah, like I don't buy a place unless I would live there. That's one thing that's one of my sort of fundamental values around investing, is like, I don't want to buy the slums. I had a friend of mine who was selling a place in Detroit, and he's like, this makes a ton of money. And I thought, don't want Detroit. I'm not interested in it, right? Yeah. So I can picture myself living in something like the home that I bought. And that's always something that I care about. So
yeah, absolutely.
We'll wrap up. There's lots of options to follow up with Andrew and myself, and you'll have a chance to review this. We'll post it on our blog, and Andrew, you maybe might put something on yours. I'll tell you, if you ever want a great real estate blog and conversation and information, truecondos.com. I mean,
appreciate
it. And you put a lot of time, energy, and money into that site.
Yeah.
It's just, there's so much value there if you just keep picking away at it. Andrew's the real deal. So